So Tom, perhaps you could start by way of introduction. Tell us a bit about who you are and what it is you do.
Tom Baigrie is the founder, CEO of LifeSearch, which is the UK's largest protection advisor, and most awarded by quite a lot. Started LifeSearch in 1998 after a 20-year career previously, almost 20 years, as a financial advisor. That reached its apotheosis when Arthur Davies, the financial planning firm I set up with the eponymous Mr. Davies, we sold that to Standard Life in 2016. And I decided that, from 1998 to 2016, I was making the decision to leave financial planning and the wealth management side of financial services behind me and focus on my primary passion, which is protecting families. So at LifeSearch, we don't sell insurance, we protect families. That's what we say. And there are 500 of us now. It's an extremely enthusiastic and expert business doing really quite a narrow element of financial services, but in my view, the absolute bedrock of the whole thing. So that's who I am.
Now, when you and I talk about protection within the financial services sector, we know what we mean. But for the typical listener who hears that word protection, we should be clear. We're not talking here about bulletproof jackets or prophylactics or anything. We're talking about insurance, aren't we? So why is insurance the bedrock of financial planning and financial services?
The particular insurance that I think constitutes that is effectively life and disability insurance. The obvious reason is that no matter what you're planning, the old Mike Tyson quote, which I'm going to massacre, is everyone has a plan until someone hits them in the face or on the nose. I can't remember. But death or disability will destroy your financial plan. So if you're saving vigorously and doing all the right things and your pension is on its way to being good, then you get disabled, then really it's all dust, isn't it? And so something on which you spend a relatively small monthly amount, certainly minuscule compared to what you'd probably want to be saving, is an absolute underpinning of your dreams of good fortune. So that's what we mean by protection. Life insurance, disability insurance, also known as income protection. It had other names in the past, like permanent health insurance, but forget those. Income protection and life insurance. And then there is a third, critical illness cover, which is a more specific policy we can come onto if we need to.
And perhaps we could go back to basics for a little bit, because protection and life insurance isn't really something we've covered to date on the Informed Choice Radio podcast. 500 plus episodes, and it's not something that's come up more than probably once or twice. So for the sake of our listeners who are hearing some of these terms for the first time, let's start with life insurance. In its simplest term, what is it? What does it do?
It pays out a lump sum if you die, and you die within a specifically agreed term. So let's say you take out a mortgage for 30 years, you would consider buying protection for that debt over 30 years. If you were repaying it, then you'd buy a decreasing policy which managed the payment in line with the debt, so that the full debt is paid off if you die. Say you were protecting a young family, and dare say anybody who's not rich beyond avarice should be buying life insurance if they have dependents, full stop, but dependent children, young dependent children in particular. There you might buy a policy for an amount that you would calculate, or we would help you calculate, is enough to pay bills from now until the child is, say, 21. Or help a partner with the paying of bills if there are two of you. There is another excellent policy which fits into that bracket, which pays out a tax-free monthly income for that 21-year period, say. So essentially, a lump sum or a monthly income payable on your death to those who you leave behind, needing the money you used to bring in.
So that's if you pop your clogs, you get paid some money. But what about, as you mentioned earlier, you experience a disability, so you lose that earnings potential. Tell us about that type of cover.
Income protection pays out a monthly income if you're unable to work through disability, no matter how that's caused. Importantly, around 80% of all claims are for mental and spinal conditions. So that's the kind of thing that tends to take us down during our working career, working life. And that leaves us, well, when you're dead, the money doesn't have to come to you. You ain't a cost anymore. It's got to go to those who used to live off you, or rather whom you used to help support, shall I say. If you're disabled, then they have to look after you, and you are no longer able to support them. So it's a double whammy, which is why income protection really should be the first purchase of any financial plan I've ever come across. It isn't because it's not in vogue, and because an awful lot of us sort of have coping strategies. We know we don't have a coping strategy for death, we get that. But disability, we think, oh, maybe mum and dad could help me through. They've got a big house still. Or my partner, we'll be able to scrape together. Or my kids, I suppose, whatever. Friends and family, my employer. Well, unless someone is contracted to help you, that's a really bad coping strategy. And the cover depends how old you are and how healthy you are. But broadly speaking, 20 or 30 pounds a month will do the job. And we spend that on just about anything, really. So as a basic building block to a financial plan, income protection is the crucial element. After that comes life insurance. And then if you are worried, and emotionally people are, about contracting a critical illness, used to be called a deadly disease, cancer, heart attack, and stroke make up about 80% of the claims there. But lots of other things, conditions are specified. If you're worried about that, then you can buy that cover too. But I think the order of 1, 2, 3 is as I've laid it out.
And turning briefly to critical illness cover, I mean, obviously in recent decades, we've seen huge advances in medical technology, medical breakthroughs. So what would have killed us 20, 30 years ago, increasingly now we survive. So are you seeing critical illness cover remaining as in demand as it used to be?
Oh yes, critical illness cover has always been in demand. It's got a great emotive aspect to it. And it's also very straightforward to sell. So mortgage brokers traditionally push critical illness cover alongside life insurance, which is a perfectly fine thing to do, but it's, to my mind, an error to take our critical illness ahead of income protection. But nonetheless, just viewed in isolation, critical illness is a policy that pays out a lump sum when fundamentally your life has taken a huge blow of one sort or another. Some of the payments do turn out to be windfalls because the cancer doesn't kill you, but you got the payout, and that's fine. That's exactly what it's there for. Quite often, its original purpose was to pay your medical bills. When it was invented, that was the idea of it, because they could be huge. Obviously, here we have the NHS, so that's not the point. The point is to, allow you a mortgage holiday, or pay off your mortgage, or give you a cash sum to rebuild your house, or rather reshape your house so it can cope with your inability to go upstairs anymore, or whatever the case may be. So all of those things need money, and therefore it's a very useful policy to have.
There's an adage, isn't there, Tom, within the financial services profession that people don't buy life insurance, but they're sold life insurance. Is that, in your experience, do people tend to recognise the importance and the value of these types of insurances? Or is it something that we have to push on people and sell to people and sell them on the benefits?
Well, there's certainly a bit of truth in that, but I think worth knocking it on the head to the extent that roughly a third of the market now comes from self-help through price comparison websites or other places where no one is selling you anything. They're merely providing you with a transactional route. So that would imply that people are making the decision to buy this sort of cover for themselves. But in reality, the reason my firm is although we do trade online extensively, we also provide advice, is that the vast majority of people start thinking about it, but then really don't know how to deal with the slight complexities of it. And there is no question, of course, that insurance of this nature is what marketing people used to call a distress purchase. You're doing it because you have to, not because you want to. So we don't want to think about death or disability, and we certainly don't want to spend our hard-earned money on things which we hope will prove to be a waste of it. So it tends to need someone to engage with you, to explain the costs and the fact that they're not that bad, of the covers and what they do and how you need them. Yeah, and then essentially that's the encouragement you need to make a proper protection plan, as opposed to buying a bit of life insurance on the web.
And something else that sometimes puts people off buying insurances is this misguided belief that the insurance provider won't pay out when they're supposed to. So obviously, if you die, that's a fairly cut and shut case. If someone has died, there's no arguing the facts. But there is that misconception, isn't there, that insurers are not always very good at paying out claims when they're made.
That is a misconception, and increasingly so. In that this year, the average payout rate on term life assurance is 99% plus. So, the only reason they don't pay out on life assurance is if frankly, you told a lie during the application, concealed something that they later found was absolutely material. People conceal things by accident, and even that won't necessarily stop the payout. So life insurance does pay out, full stop. Pays out like no other insurance ever, really, at that claim satisfaction rate. Income protection and critical illness, provided you are signed off as unable to work through disability, then it pays out again 100% of the time. There are elements to critical illness and income protection claims that need to be carefully managed. But that's true of any insurance claim. And frankly, if you buy the cover in the right way through an advisor who cares, then you will get that assistance you need in order to make sure that your claim is paid.
Now, for anyone who's listening to our conversation and thinking, this all sounds well and good, and I probably should have insurances in place of these different kinds, but I may not be eligible because I've been in poor health in the past, I have a risky occupation, or I enjoy skydiving at the weekends, or maybe I'm massively overweight. Now, there's all sorts of issues, aren't there, that can load premiums, make it more expensive. But is it a case that it's just more expensive for those people in that situation, or is it impossible to get at all?
No, it is almost always possible to get cover. We are founder members of a group called the Access to Insurance Group, sponsored by the Department of Work and Pensions, which exists to promote the fact that given the right advice, people with considerable disabilities, considerable medical history, can still get protection if they are talking to experts who specialize in underwriting people with previous medical conditions, if that isn't jargon. So there are a tribe of us that do that, and we're encouraging the rest of the market that doesn't do that to signpost people who come to them for advice with those conditions to us, so that we can help them and the industry can provide better access to its services for everybody. So that is a growing impetus within in the market. And I would say to you, no matter what your health issues, it's worth speaking to an advisor to see. Very, very rarely, you're talking about 1 or 2% of the time at most, are we unable to find any form of cover for someone. Perhaps I should just correct that, Martin, and say very, very rarely, perhaps 4 or 5% at the most, are we unable to find cover for customers who approach us.
But for somebody in that position, it should be a case of speaking to an advisor who's specialist rather than going onto a price comparison website trying to do it yourself. So if you know you're in poor health, speak to somebody rather than trying to shop around and get a rate for yourself. Absolutely.
The two biggest price comparison sites will have LifeSearch sort of all over them, because that's where they would send you to for that advice. if you didn't feel able to buy online. So they're not a bad place to start your journey. But yes, advice is absolutely critical if you believe you are, if you like, somewhat more complicated than the norm.
So again, for someone listening to our conversation who's thinking right now, I don't know where to start. I know I probably need some life cover, probably some income protection, but how do I decide how much? And then also, how do I decide and work out where to go for it? So what steps should people be thinking about to follow through that advice?
Well, I don't want to sound trite, but in 1998, I asked the same question from a supply side and said what people need is a expert at the other end of the phone. I was the first expert. There are now 250 of them odd. You go on online, www.lifesearch.com or the phone number, and end up in a conversation with someone who knows what they're talking about. The conversation has to be a back and forth one, an iterative one, whereby essentially you're explaining and they're prompting you. Our advisors would prompt you as to your situation and therefore your needs. So, do you have children? What do you earn? How old is your youngest child? All sorts of questions designed to flesh out in your mind just what you need and don't need. How big is your mortgage? Do you have any other debts? What's your budget? Let's work out a budget. Now, it's probably best to define your need first and then see where that leads you in terms of budget. But our average customer spend is less than £50 a month for a package of covers that fulfills their needs. I mean, that's what we do. So it's a really easy problem to solve nowadays if you're prepared to have a conversation with someone on the phone. I think there's a lot of distrust of people who talk over the phone in the market today because the methodology or the medium has been so massively abused by cold callers and various rip-off artists. But that's not the case with us. We win loads of awards for our advice. And we're not the only one. We've got plenty of competitors. You can find us, I suggest, by just typing life insurance advice into Google. And you'll find us and the likes of us. Or as I say, you can go through the price comparison sites and you'll get straight through to us from there.
We've touched a lot on individual types of insurance in this conversation, Tom. So, yeah, life insurance and income protection. What about businesses? And businesses have obviously been through a tough old time in the last few months. We heard a lot at the start of the coronavirus outbreak about business interruption cover and how in many cases it didn't cover the pandemic. And some business owners felt it was pretty much worthless to them at the time. So what are some of the business insurance considerations?
Just on that last point, before I answer your main question, it's very interesting, but it appears to me that the problem with business interruption insurance is that the insurers and their agents were selling it without FCA-regulated advice. They were selling it as a guidance exercise, and therefore they carry no responsibility for the outcomes they cause. And had those insurances being sold with advice, then the intermediaries in the professional indemnity market would be picking up the can for any failure of that advice. It's something that every single buyer of financial services needs to be absolutely clear on. You're either buying with what's called guidance or non-advice, which means that the person talking to you has no responsibility for what they end up persuading you to do. Now, their persuasion methods may be very subtle, but believe me, they're very successful at persuading people, as with all the business interruption insurance. But on the other hand, if you buy with regulated advice, then you are protected by the ombudsman and by the professional indemnity insurance market should the advisor cock it up by telling you that business interruption insurance would have covered you in these circumstances. So there is an extra layer of protection there. But having landed on my hobby horse briefly, the business market at the moment is very busy. A lot of businesses have taken on extra debt. And clearly, rather like a householder, if you take on extra debt, you best recognize the fact that your death or disability will damage your ability to repay that debt and get the business into even further trouble. So provided you're not absolutely in cash for a crisis and can't afford another penny, then protecting against those is what's happening an awful lot. We support Lloyd's Bank's business lending teams with in providing protection advice to their customers, and we see a great increase in business there. There's also another wonderful tip, Martin, which applies to all business owners, and that is that there is a form of tax-deductible life insurance. It's called relevant life cover in the jargon that the revenue used when they set it up. And it specifically exists to encourage directors and business owners to protect themselves and their businesses by allowing the business to pay the premiums with corporation tax relief as a business expense, but the benefits to flow directly to the family of the insured director. So that's obviously something that needs a bit of advice to get right. It's very straightforward. We do dozens of them every day. Well worth considering that if you own a business or a director of one.
Tom, thank you so much for your time today. It's been enlightening, and I think a very valuable conversation for our listeners to hear. These are basics. There's obviously complexity within the insurance market and lots of things to think about, but these are really part of the foundation of financial planning. Too often as financial planners, I think we overlook some of these basics. We overlook some of the insurance, particularly for financial planners like me, who typically work with people in the decumulation space, so in retirement, where insurance isn't front and center of their minds so much as people who are younger, like me, who are working, who need to.
Martin, there's a point I'd make to that audience, the financial advisory community, which is that in all reality, as you just acknowledged, very few financial advisors nowadays do much protection, and that's actually a good thing, because if you don't do something a lot, you really shouldn't do it at all, because you won't be very expert at it, and you won't be up to date with underwriting or with which insurer to choose and all that sort of stuff. So the trick there is to form a relationship with a specialist and simply signpost your clients to them. Historically, that's been a worry, because who knows what's going to happen to them once they get there. But firms like mine, and as I say, there are a few of us, have been looking after financial advisory clients for other financial advisory businesses for many years now, and it works extremely well. It's simply, as a doctor or a solicitor would do, referring to a specialist. When you identify a customer's need, simply pass them across to us and we'll resolve that. And if there's scale and the need, then a commercial relationship can be formed between the two businesses. We have many of those. But that then allows that acknowledgement that as a financial advisor, I can't do this, but I know someone who can. That then allows this whole area to be opened up to your client base. In theory and in practice, you will have dozens of customers, any normal firm would do, who do need some element of protection. The one area that is very interesting to me at the moment is the use of non-investment linked whole of life policies to cater for inheritance tax provision. With interest rates so low, there is a mathematical value to that way of providing for inheritance tax, which is fascinating, and there's no investment risk at all. So that's something that protection could come back into play for those in the decumulation phase, and we help quite a lot with that. If that isn't too blatant to plug, but I figure as we're talking B2B here, then I can be pretty straightforward about it.
Absolutely. No, blatant plugs we like at the end of our podcast episode. So Tom, thank you so much. We'll make sure we put links to LifeSearch within our show notes as well for this episode, so our listeners can find that nice and easily, particularly if they're financial planners and they'd like to get in touch and find out about how to refer clients to you. I think that would be a fantastic conversation to have. But thank you for your time. I do appreciate it.
Thanks for the opportunity, man.